This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you today with short business episodes, short private equity episodes, interviews with brilliant private equity and business colleagues, and a lot more. Today's discussion is four stocks that tell a story. And so we're going to go through four stocks and what they've done recently and the story that they tell. Those stocks are Evolent Health, Tesla, Intel, and Peloton. So here's the story that each of these tells. I'll start with Peloton. Peloton, famously went down the tubes a few years ago. It was finally up 35% yesterday. It's still down 25% year to date. And it's down 25% year to date, up 35% yesterday. And the story here is how hard it is to recover and the amount of resilience and challenge it is to recover and persevere and try and come back. They saw their first revenue growth in 2 years and a narrowing loss, but still losing money. But really fascinating to see if they can make it all work on a smaller overall business, but a more profitable business. But again, the challenge to come back is really hard. They have a 35% uptick yesterday. They're still down year to date. The second story we'll talk about is Evolent Health. And Evolent Health is symptomatic of the following. It was up 15% yesterday. And it's the same reason certain stocks jump, not necessarily something to do with their fundamentals, but because of the potential of a go private transaction. As private equity tries to get very much back into the game, one of the things they're very much on the hunt for, and it's big game hunting, is mid-size public companies that they could possibly take private. And that's the story of Evolent Health being up significantly the last couple of days. The third story we're following today is Tesla. And Tesla is a fascinating situation, down 5.5% or so yesterday, down 50% year to date. This challenge of trying to grow market share and get profitable is a real big challenge. They were down yesterday basically on the news that BMW has started to beat them in Europe in the EV world. There's also a story here about once you build a great franchise, you better keep on improving every single day. And if you're not doing that, you're starting to fall behind to others. I see that Elon Musk Cybertruck, and don't misunderstand me. I'm a huge Elon Musk fan. That Cybertruck is frightening to look at, and I can't quite figure it out. But you start to lose attention and really doubling down. This is a long-term challenge. Now, I'm not betting against Tesla. I'm not betting against Elon Musk. But I will tell you, the starting to lose market share in China and Europe and other places is something that's taken a long time, but starting to happen and quite scary if you're a Tesla investor. The fourth company we'll talk about is Intel. Intel's down 6%. And what's happened with Intel in a world where chip companies are going in the right direction, Intel is getting slammed. It's down 60% year to date. And I think there's a fascinating story here about in any business you're in, the work it takes to stay special. Intel, of course, over time became a commodity chip manufacturer. This is about the worst thing you can be in business in the long run because you're constantly fighting price pressure while your margins are shrinking. So Tesla's a story of you got to constantly get better, constantly try and stay special. And it's a war to do so. Thank you for listening to the Becker Private Equity and Business Podcast. What a pleasure to visit with you every day. Thank you so much. And thank you to our wonderful producer, Grace Lynn Keller. Thank you very much for being with us.